But just that small amount of money was the leading factor in producing a 22% change in the value of American stocks in one day. Every one of these people individually thought what they were doing was intelligent, but when aggregated and having to follow a given signal, in effect you created a doomsday machine. It was out of control, and some really chaotic things happened then. I would say the potential for that sort of thing, not that exact thing at all, but that sort of thing to happen in the world ahead is it's probably magnified quite a bit from what existed in the 80s, and currency enters into it. But it's not, who knows where it starts or exactly why somebody yells fire, but when fire is yelled, there will be, the currency markets will play a part in the rush for the door. What, in my view, is almost, you never say certain, but a very high probability of happening is that the U.S. currency weakens over time. No idea about the next 6 months or a year or anything, but over a long period of time, weakens against other currencies because we are following policies that don't seem to leave much alternative. Here is a quote referring to running a large current account deficit that was given on February 28, 2002. The quote is, "Countries that have gone down this path invariably have run into trouble, and so would we. Eventually, the current account deficit will have to be restrained." Now, that was said by a very smart fellow whose name was Alan Greenspan. And at that time, the current account deficit was $385 billion, and it'll be more than double that now. So here, 4 years later, we have gone down that path, which he talked about, and we've gone faster and faster down the path. And he says invariably it runs into trouble. Now, in his later years as Fed chairman, he did not emphasize this view as much. He never repudiated it, but he sort of talked about other things more. But it's going to lead to something, and it in my view, it's likely to be something significant. And people talk about a soft landing, but they never explain to me exactly how it's going to take place. And Chairman Bernanke recently gave a talk where he said the probabilities were that the ending would be good, but that you couldn't rule out the possibility otherwise. I think you will see significant consequences at some point. We will have at Berkshire a fair amount of our earning power coming from other countries with other currencies, but we will always be primarily in the United States. We may, one consequence certainly seems possible is significantly higher inflation as the years go by, because as you owe more and more money as a country, it gets more and more tempting to devalue what you owe by paying in a cheaper currency than in the one in which the debts were incurred. Charlie, what do you have to say on this?
Well, I don't feel I have any special capacity to predict whether the euro is exactly priced right now. I don't consider it a big deal that Berkshire has had the position it's had. In effect, about half of our surplus cash was stashed short term in currencies other than the dollar. I regard that as almost a non-event. Now,
I made a couple $1 billion.
Yes, I was about to say that as it's happened so far, it's been a very profitable non-event. But
if it doesn't mean anything to him, he can always give his share to me. But
yeah. Generally speaking, it can't be good to be running a big current account deficit and a big fiscal deficit and to have them both growing. I mean, a great civilization may be able to stand something like that for a way longer period than you might have thought at the outset. But you'd think that in the end there would be a comeuppance and that we would have to change policies, perhaps painfully. In fact, I would say almost surely painfully, wouldn't you, Warren?
Yeah, I would. Yeah. And it's interesting because I think almost everybody says it's unsustainable. And then they never explain how it doesn't keep being sustained until something very unpleasant comes along. But then they also say that there will be a soft landing. And I don't always get from A to B to C when I listen to them. Certainly the longer it goes on, the greater the net debtor position the United States is in, the more people see that we are sort of addicted to this kind of behavior, the more chance there is at some point, probably brought about by some other extraneous affair, that currency there aren't some big adjustments that take place and perhaps some chaotic markets in which currency adjustments play a part. But knowing when or exactly how, it's impossible to say that sort of thing, to predict that sort of thing. Well, people are always going to want to be entertained and they're going to want to be informed, and some mix thereof. But, we only have 2 eyeballs and we only have 24 hours a day. So if you go back 50 or 60 years and think about how people got informed or entertained then, the choices were far fewer. You had the local movie theater, and you had the radio, and you had newspapers. And as the years have gone by, what technology has done is opened up a huge variety of ways of being informed faster, certainly, and whether it's better or not depends on who you ask, and certainly entertained in way many more forms, many that are free, and it hasn't expanded the time you have for entertainment or for acquiring knowledge. And anytime you get more and more people competing in any given area, generally the economics deteriorate. And the economics have deteriorated for newspapers, although they're still enormously profitable in relation to tangible equity employed, but they do not have the same economic prospects if you look at the future stream of earnings that it looked like they had 20 or 30 or 40 years ago. And television, again, the margins have been maintained surprisingly well, but the audience keeps going down, and for any given means of distribution. So that has to erode economics over time. Cable was thought to operate pretty much all by itself, and the telecoms come in, and very few businesses get better because of more competition. They like to talk about it, but their idea. I had one friend in the newspaper business, and I think Charlie used to tease her a bit by saying that her idea of a competitor was a corpse laid out on a slab with a toe twitching, and then it is not a better business when more people compete. So I think that, generally speaking, the economics of media businesses do not have a great outlook. I mean, compared, like I say, they're enormously profitable now in returns on tangible assets. I mean, it's a business. A license from the federal government became a royalty stream on huge amounts of money. I mean, there were only 3 highways electronic highways between Procter & Gamble and Ford Motor and the eyeballs of several hundred million people. And those 3 highways could make a lot of money when there were only 3 highways. But you keep building more ways for the P&Gs or the Gillettes or whomever it might be, or Ford Motor or General Motors, to get to those eyeballs, and you decrease the value of the highways. It's not complicated. So I think you will see. It's hard to imagine those businesses having great prospects in aggregate. We owned the World Book. We still own the World Book. We were selling 300,000 sets a year, something like that, in the mid-'80s. It's a very valuable product. It sold for $600 or thereabouts, and it was worth it. But the problem became that you could get that same information, or a good bit of the same information, very, very cheap through the internet. And you didn't have to cut down trees, and you didn't have to run paper mills, and you didn't have to hire United Parcel Service to deliver a very bulky package. And it isn't that the product we have isn't worth the money. It's that people have lots of other alternatives. And that's true in information and entertainment in a big, big way. And it won't stop, in my view. Charlie?
Yeah, it's simplicity itself. It'll be a rare business that doesn't have a way worse future than it had a past.
Give them the bad news, Charlie.